Good morning, everybody. It's Tuesday, July 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up 1.75 at 406. November soybeans were up 1.5 at 1041.5, and December Chicago wheat was down a half at 556. Yesterday afternoon's crop conditions came back unchanged for corn at 68% in the good to excellent category. One thing to note, we're at 41% silking versus 32% for the 5-year average there. Soybeans, 68% good to excellent. That was also unchanged on the week. 51% blooming versus 44% for the 5-year average there on the blooming side. Winter wheat harvest moving along pretty good, 71% harvested. That's versus 63% last week and 62% for the average. And spring wheat jumped a couple of points in the good to excellent category to 77% good to excellent. That is against 75% last week. So still really strong ratings there in the spring wheat complex. Notebook crush was released yesterday as well, 175.6 million bushels. That was a couple million below the estimate there. They were looking for a number closer to 177.9. And last but certainly not least on the outside data, Chinese GDP was shown to have expanded by about 4.7%. One thing to note, that is the slowest that it has advanced in 5 quarters. So not really great economic news from China. Probably looking, at China just in general, nothing really to speak of in terms of new crop soybean commitments, and they're scheduled to take a bunch. So with that, Dustin, I know we had pretty significant weather event roll through the upper Midwest. Winds clocked it, in various locations in excess of 100 mile an hour. As far as we can tell this morning, anecdotally, guys made it through for the most part. We're still gathering information, but by all accounts, not a total disaster that we were hoping to avoid there. So maybe a few thoughts this morning, and then we'll throw it around the room.
Yeah. So thanks, Dan. Yeah, anecdotally, we haven't heard a lot of damage yet. Doesn't mean it's not out there, but based on what we saw on the radar and what we've been hearing from the weather guys that we follow, it could have been a lot worse than what we've heard anecdotally so far. So not a market moving event as far as we can tell right now. But then again, derecho in 2020 was also, it's kind of hard to kind of understand how widespread it was back then. I think it's pretty safe to say this is not that. So we'll see. We're going into another good forecast though. We have another drop in temperatures for the next 2 weeks, a small increase in precipitation. So by all accounts, everything's still moving along as it has been. There's really nothing real positive to shake funds out of their short position. Watching things like currency, watching exports, and just understanding also that we are down to an area where this is very profitable for the demand side. So buyers and sellers still do need to match up. And even though we might have pretty good weather, and price action doesn't necessarily always have to go lower. It still has to be where you have willing buyers and willing sellers. If there's an excess corn crop, like a 184 or 185 yield, obviously that's going to be a lot of extra supply and it's going to be a buyer's market. But if we're, sub 181, even 180, I'm not so sure that there's going to be just a bunch of excess corn around that's going to drive the price way down into the threes. So it's a hard year for kind of thinking about price direction. I think we're still going back to, where do you stand from your insurance levels, farm bill, what you've done so far? Where is your biggest risk, and should we go and alleviate that risk area? I think that should be the focus.
Yeah, it's Ben made a comment before we came on this morning. It's kind of blah. There's not a significant case to be made to pound it this morning, and there's not a real significant case to buy it. So you're kind of just stuck chopping around here. Ben, maybe just a few thoughts to add to that.
Yeah, leaning up, getting into some of the insurance nets here, getting pretty close to them. I think it's going to be difficult to really pound corn down with a record short. And it doesn't mean that they can't generate more shorts. They still have to play this game for another 4 to 7 weeks until we really get into harvest. Not so sure that, you kind of see a last night where you pause for a second and you look at something like a significant weather event and wonder, is that enough to make anyone nervous? And, by early accounts, that it wasn't really widespread damage. Of course, there is some out there, and our thoughts go out to those people. But it doesn't appear this morning that that's going to be an issue for the market. We do have to get, we'll get some FSA data in August. That's an item where you could look backwards and go, yeah, I thought that there would be some losses in some of these places where there are a lot of rain. So I think they have that as a risk point. And then obviously if still, we're still in a place where you could start to draw yield down with some poor finishing weather. So the market to me feels just kind of stagnant here. I don't know why you would take a massive position that's wildly profitable at this point and cover it. And I don't know what the motivation would be to power it down to much lower prices. So, just talking to people, if they were to do that, how would you handle it? Because there's a lot at stake should they do that. So I think we're just kind of in a dead zone here for a little bit. I think maybe from a short covering perspective, the one thing that could be advantageous is if we sit here long enough and the managed money is not getting paid, they may decide to go somewhere else, even if it's another market that has some sort of appeal to them. But I don't see much either way from here in the short term.
Right. Dustin, what do you read in? I mean, continuing to see, poor data out of China and, just the slowdown there. And I think we'd be remiss to say that, looking at polling numbers, Trump is beginning to, extend a lead, if you will. And I think the trade is starting to take notice of what a potential second term looks like for President Trump.
Yeah, it's hard to know what the market is discounting. I think last night, or coming in from the weekend, we had beans lead the charge lower Sunday night and Monday. And, at the same time, we had like Trump's odds of election went up on the predicted. So when we know that he's publicly stated, looking for up to 60% tariffs, I think there is a portion of the market that might be trading potential trade war again. That doesn't really account for. We've had precedents that there's MFP payments, market facilitation payments, if we are willingly entering into a trade war. So I think there is some of that happening right now. And then also it's combined with just a little bit better forecast. So it's hard to tell what the market is truly discounting. You'd have to think it's a little bit different setup though, because, before there was a drop in total Chinese demand too from ASF during that time frame. Yes, Chinese economic data is starting to slow down a bit, and maybe that results in dietary changes or what they're willing to pay for protein. But they still, all of last year they still had record imports of corn in certain months. Like they had 5 million metric tons of corn imports in December last year. None of it really coming from the U.S. So there's still a pretty hefty appetite for grains and soybeans in China. They have not forward purchased from us though. The forward sales, I think we just got our first one here recently. It doesn't mean that they won't come in though and take a bunch from us, especially prior to inauguration day, prior to election. It still might do that. So I wouldn't rule anything out. When you take world stocks, they look fairly abundant right now, just using the WASDE numbers from July. But if you exclude the Chinese stocks that they say they have on hand for both corn and wheat, we're actually quite tight for both of those products. So a small change in the end, if yields for whatever reason, don't come out significantly above trend, I think corn is still rather tight globally until we get the next supply refill from South America next year. So
very good. We got a couple minutes here, Rylan. Welcome back to the War Room. I know we got a cattle on feed report that'll be out Friday, 2:00 Central. Maybe just a few thoughts on the livestock markets and what you're looking for towards the end of the week.
Yeah, it looks like it's been kind of a quiet trade to start the week so far at this point. I mean, and there's a lot of anticipation for the cattle on feed report on Friday. Looks like on feed inventory for July 1 is expected to be up about 1%. June placements at 98%. June marketing's down about 8%. So I think at this rate, this is what the numbers, or at least this is what we're going to be trading up until then. Cash markets have been kind of drifting lower here, but there's a huge discount on the board right now, so everybody's trying to figure out which is right. Are we going to see some kind of convergence start to happen now, or which is going to move first? Are they just going to meet in the middle? So at this point, cash market really hasn't seen the kind of weakness that the board has, of course, but I think that's something to keep in mind at this point. So it looks like it's on the horizon. Things are going to narrow up. It just seems like you priced in a lot of really negative supply news already onto the board. And we still have the managed money and the funds still pretty long this market. So if there's a big shock here on the June placements, we already know we're coming into kind of bigger supplies this month. But if there's a bigger surprise here on placement number, you could see this discount continue to widen. We could see cash prices fall. So I think that's just what everybody's going to be watching for this week. As far as hogs go, once again, they're starting to stabilize as well. Looks like we kind of crashed those lows last week. It seems like the index has been pretty steady here. Same with cash prices overall. So it just seems like we've got kind of a near-term kind of stabilization here in the cutout. So it kind of feels like the futures are taking note of that right now. But we've kind of drift lower seasonally between now and the end of the year, just in terms of cash prices. So I think you got a lot of that sentiment also priced in the board, and the funds are still leaning pretty short in this market. So if there's any kind of big surprise there, yeah, maybe we could shake some of them out, but they don't have a very large position as it were to deal with. So overall, it doesn't seem like we're going to get some really big kind of capitulation kind of move unless there's a really good story. So right now, it just looks like everything's kind of quiet here in the meats.
Very good. Appreciate the update. We'll keep an eye on that as we head towards the end of the week. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
Thanks, Dan.